The stocks discussed on Phil's Gang are not in any way a recommendation or solicitation to buy, sell, or hold. If considering acting on information presented, we first recommend you seek out a competent, licensed professional for advice. Get ready for the radio show that tells you what Wall Street doesn't want you to know.
Oh, I'm a money magnet. Money's coming to me. Money sets me free. I'm a money magnet. Money's coming to me.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Radio Network. With your host, Phil Grande.
Given the fact that we're in a housing boom, why are they buying, $40 billion a month in mortgage-backed securities? I think it's $80 billion in treasuries, but $40 billion in mortgage-backed securities?
Well, let me help you out with that, Carlo. Because they don't feel confident with the market. That's right. Hi, I'm Phil Grande, philsgang.com. Welcome to my show where you get the truth. All right, let's talk about this mortgage-backed securities. That all started back in the days of Baby Bush, the dope. That he decided after 9/11, and they opened up the credit, and all the prime credit people, good credit people, they bought a house. It wasn't enough. He had to get more housing going. The economy was in trouble, so he opened up the subprime. He started to sell houses to subprime people. People who shouldn't have a house, who couldn't afford a house. And you remember what they did? They let them pick out their own payment. They didn't have to verify that they had a job. I mean, what an idiot. So they came up with the idea. People, when the banking industry, you gotta. Yeah, we got this guy next door just starting to go. You got to be kidding me. So when the banking industry feels, they don't feel confident that they see the credit. They see the credit is getting weak, or they get a little nervous. When we had all the subprime payments starting to crumble, people weren't paying their payments. They got nervous, so they started to bundle all the payments, and they started to sell the payments to spread the risk. So, in other words, J.P. Morgan would go around and buy all the mortgages, and then they take the mortgages and split them up. So you're an investor, you bought a portion of that payment. That's why they do it. When they start doing mortgage-backed securities, they're identifying that the housing market is in trouble because the banks don't want to be stuck with these bad mortgages. They get nervous. So let's take the mortgage and let's split them up. They call them tranches. Split them up, and then you, John, you can buy part of the $500 payment. And you, Pete, you can buy part of the $500. And you, George, and you, Susie, and you, Mary. So you got 500 people buying all these parts of the payment. Then they sell those. Then those people sell those. What a mess. That's where we are now. That's why. It's just identified. Remember, this housing market, I told you, is one big fat lie. And they keep telling you how great the housing market is. It's a very small segment of our economic growth. It's not like from 2001 to 2006. And people don't understand that because the fake business news networks, they will tell you the lie. They're not going to tell you the truth. They don't want you to know that. They want you to think, wow, we're in a housing boom. Wow, this is great. I'm going to refi my house. I'm going to buy a new house. God darn. So it's a very small market. It only boomed because of the pandemic. People decided, I'm getting out of New York. I'm getting out of all these crazy cities with all the riots, and I'm moving out. And that's what they did. So, to answer Larry, so I hope he's listening and hope he understands now what a mortgage-backed security is. A red flag. The housing market is ready to go down.
The economy is just taking a slight breather. I think we're going to go back into a significant growth mode.
economy's taking a slight breather. Are you kidding me? The economy hasn't grown. What do you mean a breather? From what? Let's go back to 2008 to today. Let's take an average the growth, 1.6%. Oh, but see, they don't do that. They don't want to do that. Oh, no, don't do that. Don't tell the people that. Let's just take from February of 2020 to May of 2021. Let's just take that sector, and we'll see, boy, look at this. Holy mackerel. The economy's growing big. Wow, look at this. We're going to be up 6, 7, 8%. Only because they're coming from such a low number. And it's not sustainable. I talk about it every day. It's not sustainable. I could talk to my blue in the face, but nobody's going to believe it. They're going to listen to these people, these dopes, on the fake business news networks. You know, people don't realize these rates for 13 years at zero. They don't realize the damage that has done to this economy. Main Street got screwed. Middle class got screwed. The only people that benefit from rates at zero are the speculators, the top 1 percentile of the population. Their big lie was, we're going to bring rates down to zero to benefit the working class. Well, those are the people who got hurt the most from these low rates. These low rates. And think about the retirees, what they did to them. They said, we're going to screw the retirees so we can give money to J.P. Morgan, Goldman Sachs, Citigroup, so they can go in the market, and we're going with zero rates and offer them to the CEOs, so the CEOs can get money almost free, and they can do stock buybacks and push the stock market up 20%, and J.P. Morgan holds a lot of stock, and they get wealthy, and the guy gets in there gets wealthy, and the poor guy sitting at home that's retired, he's screwed. I mean, think about that. Keeping interest rates, what they did is punish the savers to make the top 1 percentile, to make Wall Street rich. That's how they did it. If you were getting a savings rate of 5% in a bank, or a CD of 5%, they dropped it down to near zero. That way there, they could give you, the speculator, money low and free to go speculate in the stock market. It's the whole thing from 2009. Okay, the lows of 2009, everybody talks about the lows of 2008. No, 2009 was even lower, remember. They wanted to rally the market. Savings accounts and CDs been destroyed. Retirees had to go back to work. The Fed monetary policy since 2008, they said we're going to make the retirees sacrifice. We're going to make the elderly sacrifice. Let them go back to work because we got to make sure the top 1% are getting rich. We got to get the stock market up. You got to make sure Jamie Dimon is getting richer, and Buffett's getting richer. So let's just take Joe Suckface, the retiree who eats catfish or dogfish or whatever dog food every Wednesday. Instead of Wednesday spaghetti night, it's now dog food night. Poor retiree sitting there, he's trying to live on Social Security. He's gotten screwed. You know, a check with Social Security check, the average check's around $1,200. Do you know what the check should actually be? If you go all the way back to 2008, instead of getting $1,200, if they really adjusted for the right inflation rate, they'd be getting, instead of $1,200, they'd be getting about $1,800. What a difference that would make. But they didn't want to do that. They wanted to screw them, so to keep interest rates so the rich could go into the market and make more money and keep moving the market up. Why did they want to do that? Because they didn't want to tell the people the truth on Main Street. They wanted to look at the market. Say, look at the economy. Look at the stock market. Look at the economy. Wow, look at the economy. They point to the stock market as the economy, and people believed it. Then people went out to buy a car because the rates were low. Well, we'll talk about that when we get back, how they get screwed.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
Remember, when this market crashed in 2009, it should have never crashed because the chairperson of these two committees, their job was to protect consumers, protect our investments, and they're supposed to ensure that our investments are being monitored. Where were they in 2009 and 2008? They weren't anywhere because they don't do that. They take care of themselves. They protect themselves. They become richer. So you can't depend on these crooks in Congress. The stock market is a great place to be, but you just got to know this is a different market than your grandfather's market. So why don't you, for 30 days, join my gang, 877-600-GANG, try it for 30 days, $39.95. Follow me. I tell you when to buy, when to sell, when to add, and when to run like hell. All I ask you start making money, please remember St. Jude.
Don't wait. Join Phil's Gang today and make profits. Go to philsgang.com or call 877-600-GANG. That's 877-600-4264. That's 877-600-4264.
Hi, I'm Phil Graney, philsgang.com. You probably heard me on the radio talking about investing in stocks and trading stocks. Well, this is a special message that I am sending out to you. You, the person who is the beginner, who are getting excited. You're seeing every day the stock market going up, never comes down, keeps going up because of the tremendous stimulus that the president is putting into this market. He wants to continue this market going up while the economy's going down. And that's what it's doing. The economy's going straight down. You know, banks right now, worst ever. They've gone down 40%. I mean, everything's going down. Companies aren't making money, but the stock market's still going up. And you got to be very, very careful when you get into a market like this. You got to know when to get out, and that's where we come in. So if you're a beginner and you want to start learning how to invest stocks properly and have the comfort level of knowing when to get out, when to buy, when to sell, and when to get out, contact us at philsgang.com. Join today, free for 10 days. What, are you nuts? If the stock market can make you so rich, especially Apple and Microsoft and Google and Amazon and the rest, why are so many Americans poor? If the 401k promises you a retirement, then why is it we are in a retirement crisis? Here's the answer. Because 85% of you get out of the market too late. I fixed that with my color-coded chart, which tells you when to buy, when to sell, and when to get out. That's right, when to run like hell. Check it out. You get a free membership and the free color-coded chart for 10 days. Check it out, philsgang.com.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here. And it doesn't matter your religion or what part of the world you're from, all that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
Warning, Google, Apple, Microsoft, Netflix, Facebook, all these hot stocks are going to crash. They're going to drop as much as 60-70%. Hi, I'm Phil Grandy, philsgang.com. Exactly what happened in the dot-com days is going to repeat itself. Remember, 85% of people lose money in the stock market because they don't know when to get out. I fixed that with my color code technology chart. It tells you when to buy, when to sell, when to add, and when to run like hell. That's right. Make sure you check it out. It's free for 10 days. philsgang.com. When the market's open, we watch the market all day long. And when we see there's an opportunity for a stock, and it's a stock that we've been following, there's a lot of stocks we put on our watch list, and it has to hit a certain criteria. Then when it does, we alert you. You immediately get an alert that says, we bought this stock, X stock, at $30. So you get an alert immediately. What's better than that? I mean, nobody does that for you. But the most important thing, they'll say, okay, here's why we're getting out now, or here's why we're taking profits. I think it's going to go down. Look, the most important thing is this. I want you to be prepared for when the market does tank or rally, that you're with us, Phil's Gang. 877-600-GANG. Join my gang right now, Phil's Gang. 877-600-GANG, and you'll be in position, and you'll sleep at night, and you don't have to worry.
Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264. That's 877-600-4264. Welcome back. Learn, invest, and make profits with Phil Grandy. Simply go to philsgang.com. Now, here's Phil.
And welcome back to Phil's Gang. Remember gold mining stock. I've warned you for how long. Nobody listened to me except my members. And look how well gold is doing. Because inflation, the only thing people are going to buy is gold. Gold. Now, we're talking about the savers, how they got really screwed. So they went to the savers, they were going to reduce your rates down from 5% to almost nothing. That way we can give low rates to CEOs so they can do their stock buybacks to push the stock market up artificially, but we won't tell you that. We won't explain how that happens. We'll just tell you, wow, the stock market is now the economy. And so the guy on the street, he doesn't get it. He said, oh, boy, I can go and get my car now. He said, I can buy a car. Look at the low rates on the car. Wow, I can go buy a ski-mobile and a snowmobile and a puddle-mobile, all almost nothing. Look at this. Look how cheap their rates are down. But he doesn't get it. There's nobody at home. You don't get it. So how did the rates get low? Is there some magic bird flying around just drops these low rates? No. Low rates comes from printing money. What do they do with the printed money? The Federal Reserve goes in and takes the government's credit card, which they issued them, and when that credit card is tapped, the government's credit card is tapped, the government borrows money by offering to you and me higher rates than we get in savings. Well, that's really good, huh? Now you don't have any new business investment because you go to the bank, there's no money there because everybody's moved their money out to the treasuries. So the government taps out their credit card, then asks for money from you and me. We get a treasury, and also from China. And then they come in, the Federal Reserve, and buys all the debt from the credit card, cleans up the credit card. Now the government's got a zero balance, and buys all the treasuries. And when they buy the treasuries, rates go down. But how do they do that? They print money. So it weakens the dollars in your pocket. So you go and say, oh, look at this. I got a big break on my car interest rates. Wow, look at that. Look how low they are. But no, you didn't gain anything. Because when you go make the payments on the car, the dollars that you're making the payments with is almost worthless, the purchasing power. So there's no gain. You haven't gained. This is the problem. This is why we can't grow the economy. You can't grow the economy. But people don't get that. So people are out purchasing cars and boats and this and that because, oh, rates are low. But they don't understand when they go to write a check for it, make the payment, they need more dollars. They need more dollars, more pieces of paper. You need more pieces of paper. Instead of one piece of paper, you need 10. But they don't figure that out because know what they do? They get confidence because these guys like Larry Kudlow and the rest of them about a fake business network points to the stock market as the economy, and people believe it. Low rates destroy the economy, especially when you keep them so low for so long. The biggest problem is the savings banks. Who's going to keep their money in the savings banks when they get more money by buying a treasury? If you can get 2.2% buying a treasury instead of 1/10 of 1 penny at the savings in the bank, who's going to put money in the bank? Now there's no money in the bank. And what little money is in the bank, a small business, an entrepreneur who wants to start up a business, and startup businesses is the backbone of our economy, and done by who? By the middle class, which we have few people left. So you want to go start a business, you walk into the bank and they're saying, well, we're going to have to charge you 10%. What? Well, we don't have much money left because everybody took their money out and they bought treasuries. So the government is competing. The government is screwing Main Street. The Congress is government. Congress is screwing Main Street. They've been doing this for 13 years. I said yesterday, low interest rates affect insurance companies. The premiums keep going. You ever notice your insurance premiums keep going up? You don't know why? Because of low rates. It affects the returns an insurance company makes. So they raise your premiums. Low rates also on savings kills retirees. They cut back their spending. They have to. They got to go back to work. I tell you this all the time. I go to Publix over here, and this guy's got to be 90 years old trying to they're doing bagging of groceries. And when you go outside, you see the guy the customer wheeling the guy. They take the guy working at 90 years old, who's supposed to be bagging. They feel so bad for him. They pick him up and put him inside the basket. And then you roll the basket to your car with him in it. And then you unpile your things and you bring him back to the store and help him out of the basket, give him a tip. And he goes back bagging groceries because he can't make it across the parking lot. He's 97 years old because he can't make it on savings. So you get screwed with savings rates. You get screwed with your insurance company, higher premiums. You get and they cut back. The banks cut back on the number of loans they're going to make because they don't make money because the interest is zero. They make more money taking and lending that money to taking the money themselves rather and buying stocks or gold or whatever they do. And remember, low interest rates is what causes the stock buybacks, and the consequences is severe. It's unbelievable. The money system, people don't understand. These low interest rates that they do stock buybacks with, the consequence of that, the money doesn't go through the system. It goes directly to the top 1% who will get all the gains from the stock market. The increase in stocks because of the stock buybacks. It's crazy. People don't understand what's going on. The consequences are severe for the last 13 years, and that's why this market is going to crash at some point. Kills jobs. It's unbelievable. Unbelievable. So, what do? You got to be in the right stocks, that's all. You got to be in the right stocks. And you got to make sure you know how to short a stock. I'm the only one who talks about this every day. Nobody listens. Everybody listens, but they don't do anything. Here, I'll give you an example. Today, we got stocks going back up, big tech stocks. I hope you're not buying them. And they're telling you to buy them today. Buy it in a pullback. Where in a pullback do you buy? We'll talk about that when I get back and a lot more. Please help St. Jude. Remember, join my gang free for 10 days.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG. With the philsgang.com membership, we bring investors right to the floor, into the pits with Phil's daily live webinar classroom. Get inside market guidance on investing strategies. Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264. Don't have time to analyze and study stocks? At philsgang.com, we recognize that there are all types of investors, and we also recognize that your time is valuable. So we offer investing programs for all individuals. We offer investing programs for long-term and short-term positions. And philsgang.com provides quick and easy to understand investing videos that only take a few minutes to watch. With the philsgang.com investing programs, you will learn technical stock charting, how to execute your trades, and most importantly, you will gain the confidence to know when to get out of a stock and take profits. Sign up at philsgang.com. That's philsgang.com. Or give them a call, 877-600-GANG.
When the market's open, we watch the market all day long. And when we see there's an opportunity for a stock, and it's a stock that we've been following, there's a lot of stocks we put on our watch list, and it has to hit a certain criteria. Then when it does, we alert you. You immediately get an alert that says, we bought this stock, X stock, at $30. So you get an alert immediately. What's better than that? I mean, nobody does that for you. But the most important thing, they'll say, okay, here's why we're getting out now, or here's why we're taking profits. I think it's going to go down. Look, the most important thing is this. I want you to be prepared for when the market does tank or rally, that you're with us, Phil's Gang. 877-600-GANG. Join my gang right now, Phil's Gang. 877-600-GANG, and you'll be in position, and you'll sleep at night, and you don't have to worry.
Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264. That's 877-600-4264.
PhilsGang.com is not the only way you can stay in touch with what we do throughout the day. With today's social media, you can stay up to date with Phil's Gang current events. You can find Phil's Gang on Facebook, Instagram, Twitter, YouTube, and more. Phil's Gang Radio Show is broadcast live Monday through Friday from 3 p.m. to 4 p.m. Eastern Standard Time on Facebook, Periscope, and, of course, YouTube. Don't forget to hit that like button and subscribe. Go to philsgang.com and find our social media buttons at the top left-hand corner of the site. philsgang.com and Phil's Gang Social Media, keeping you connected.
Hi, I'm Phil Grant at philsgang.com. You probably heard me on the radio talking about investing in stocks and trading stocks. Well, this is a special message that I am sending out to you. You, the person who is the beginner, who are getting excited. You're seeing every day the stock market going up, never comes down, keeps going up because of the tremendous stimulus that the president is putting into this market. He wants to continue this market going up while the economy's going down. That's what it's doing. The economy's going straight down. You know, banks right now, the worst ever. They've gone down 40%. I mean, everything's going down. Companies aren't making money, but the stock market's still going up. And you got to be very, very careful when you get into a market like this. You got to know when to get out, and that's where we come in. So if you're a beginner and you want to start learning how to invest stocks properly and have the comfort level of knowing when to get out, when to buy, when to sell, and when to get out, contact us at philsgang.com. Join today, free for 10 days. Hi, I'm Phil Grandy. Is your business prepared to respond to any emergency in the workplace? Well, you better be. Let over 30 years of law enforcement experience go to work for you. Boyd Investigative Group is here for all your business security needs. I know. I use them. They're terrific. Call today for your free confidential consultation. 941-724-4535. That's 941-724-4535. Or visit them on the website, BoydInvestigativeGroup.com.
License number A1900020.
Hi, I'm Phil Grant at philsgang.com. You probably heard me on the radio talking about investing in stocks and trading stocks. Well, this is a special message that I am sending out to you. You, the person who is the beginner, who are getting excited. You're seeing every day the stock market going up, never comes down, keeps going up because of the tremendous stimulus that the president is putting into this market. He wants to continue this market going up while the economy's going down. That's what it's doing. The economy's going straight down. You know, banks right now, worst ever. They've gone down 40%. I mean, everything's going down. Companies aren't making money, but the stock market's still going up. And you got to be very, very careful when you get into a market like this. You got to know when to get out, and that's where we come in. So if you're a beginner and you want to start learning how to invest stocks properly and have the comfort level of knowing when to get out, when to buy, when to sell, and when to get out, contact us at philsgang.com. Join today, free for 10 days.
Welcome back to the Phil's Gang Show. Are you ready to make profits in the stock market? Then go to philsgang.com or give us a call at 877-600-GANG. Now, here's Phil.
Hi, I'm Phil Grandy, philsgang.com. Remember to subscribe to my Phil's Gang YouTube channel to get both my live and archived radio shows. Also, my free Phil's Take on the stock market. Also, sign up and get a free 10-day chart and membership trial. That's right. Free for 10 days. Check it out and learn how to short. You know, now today the market's up, right? And you hear this. Listen to this. This is unbelievable. Listen to this.
Buy the dip. Stay the course. Don't ever take investment advice from me.
So last week, Barney's all disappointed because he's losing money.
Don't ever take investment advice from me.
Now today he gives us investment advice.
Buy the dip. Stay the course.
Buy the dip. Stay the course. Buy the dip. Where? When? When do you buy a dip? Anytime, just buy it? What are you, nuts? Are you kidding? I've been in this stock market for 51 years. Been on this earth for 75 years. I never heard anything so stupid. Just buy the dip. Buy it today. And we're watching the tech stocks. Everybody's jumping back in to buy these tech stocks. Exactly what happened in the dot-com crash. There's no buy signal. There's no buy signal. You got all these guys on the fake business news network, CNBC, Fox Business, all telling people, "Whoa, this is good. Look at this. You can buy these stocks, buy all the big tech stocks on sale. Come in, buy them on a dip." And a person buys, he doesn't even look at the 10-year Treasury yield. Why would you buy The only time the tech stocks did well when the 10-year Treasury rate was between 85 points and 100 points. We're at 100. We're averaging now about 165 points. We're soon going to go to 200 points. They're not going to. You can't. High yields, 10-year Treasuries, high yields, just kill the text. Look what happened in February. We had a 10% nose. Yeah, we had a 10% correction. Not February. When was it? It was. Let me just look. Was it April? Let me look back here. We had a 10% crash or correction. Let me look it up. But it was. Let's see. It was. Was it March? Let's see. Where was it? It was back here in. This was February. I think it was back. I think the 10 years there. I think it was back here in February. Yeah, it was I think it was. No, that was the big crash. When was it? Right before that, we had a big run, and we had this 10% correction. Yeah, I think you were. It was February. Yeah, you're right. It was February. And the reason, because the 10-year Treasury yield went from 85 basis points up to 100 basis points, or 100 basis point. Boy, that thing just dropped. Then they started to tell the big lie. That's right. You're right. It's February. They turned around and started the big lie. Oh, don't worry about interest rates anymore. Don't worry about the 10-year yields going up. Doesn't matter anymore. It's transitory. They're not going to be here long. Really? How come they're not going to be here long? How can they not be? It's such a lie. Think about it. What has been moving the market up since 2008? And how they've been keeping these interest rates low? Because they go in and buy the treasuries off the credit card. Okay? So the government, as I tell you over and over, uses the credit card, tap it out. They need more money. They call on you in China to loan them money, on me to loan them money. We take our money out of savings and CDs, give it to them. They give us in return proof of debt. They owe us the money back. And then they come in, the Federal Reserve, and buy on their balance sheet. They take all that debt away from the government's credit card. So now they got a clean credit card to do it all over again. So and what happens is that's how they keep rates low. They keep going in and doing it over and over and over. But what happens is you're killing the dollar, causes inflation, and the rates go back up. Because people start selling their treasuries. People sell their why do they want to be in treasuries when they can buy stocks? So they sell treasuries, and when they keep selling their treasuries, yields go up, and it kills the big tech stocks. That's what's happening today. Rates are up. So if you're going to buy a tech stock today, you're going to get screwed because rates are up. Rates are up. We're at 160. What is it today? 167. Remember, we had a 10% correction when they were 125 basis points. Now we're 167 basis points, and they're telling you to buy. Unbelievable. And people believe it because they're telling, oh, don't worry about it. It's temporary. Inflation is temporary. So right now, if you're going to here, I'm looking at, and let me look at here. I'm going to give you a stock. Give you an example. All right, let's take, for example, this would be a good one, XLK. XLK is the ETF, is a basket of all the big tech stocks. When you, on my chart, nobody else's charts in this country, better not be, because this is patent. My chart shows that it's red. So the stock's going up today, and it's red. That means it's going up, but it can't be sustainable because there's not enough money buying the stock. And then we check our trend on our color-coded chart against this candlestick moving up today. And it's telling us you got to be an idiot buying these because you're going against trend. See, stop looking at your candlesticks on a chart. That don't help you. You don't even need candlesticks. When you're experienced, you don't even need candlesticks. You just follow your trend. Follow your trend. You go hit this guy next door with a 2x4 or something. Doesn't he understand? God. Okay, anyways, they got a whole construction project next door. All we ask them is that we go on the air at 3 o'clock. Would you just please not? I mean, it's okay. You got to make a living. We get that. Okay, but can't you wait an hour? An hour? No, they can't. All right, anyways, so that's one stock. So let's take another one. Let's take another stock. If you're buying, let me go through these. If you're buying, if you're buying Amazon, you're really screwed today. Unbelievable. All these, they're all going to come back down. They're all going to come back down. Google. If you're buying Google today, you're in trouble. Because you're going against trend. See, don't look at the candlesticks going up. Don't listen to these morons. Don't watch the candlesticks going up. You got to watch the trend. If the trend is going down, it's like this. Think of the trend as an arrow. You go down a street, and it's an arrow. It says go right. And then otherwise, do you listen to that arrow or some drunk on the street? Okay, that's high on cocaine, and you're going to ask him for directions? Because let me tell you, it's the same thing if you listen to somebody on these fake business news networks. They've already told you, don't listen to him. Look, he said.
Don't ever take investment advice from me.
And then he gives it today.
Buy the dip, stay the course.
So my point is, when you're going to buy a stock, it's like driving down a street and you don't quite know where you are, and you see it's a sign points right, an arrow going right. Well, that's the way I should go. Would you depend on the arrow, or would you depend on a guy in a quarter who's drunk and who's been doing heroin all day? You'd look at the arrow, right? Of course. Well, think of the same thing. Think of the fake business news networks, these experts, as the guy on heroin and drunk. Follow the arrow. Why are you following these people? So the next time you listen to any of them, think of them as alcoholics and full of cocaine and nuts. Instead, look at the sign. Now, where do you get the sign? How do you know the sign's correct? Because my charts are never not correct. Because it's color-coded. Try it for 10 days. You'll see. I feel bad for people buying these stocks today.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG. What if you could have an in-depth understanding of the stock market just like the pros? Well, thanks to Phil Grandy and philsgang.com, you can. philsgang.com offers comprehensive, up-to-date market information designed to help you understand and anticipate market behavior. With philsgang.com, you'll build your investing confidence even through down cycles and periods of uncertainty. Go to philsgang.com. philsgang.com today. 877-600-GANG. 877-600-4264.
Warning. Google, Apple, Microsoft, Netflix, Facebook, all these hot stocks are going to crash. They're going to drop as much as 60-70%. Hi, I'm Phil Grandy, philsgang.com. Exactly what happened in the dot-com days is going to repeat itself. Remember, 85% of people lose money in the stock market because they don't know when to get out. I fixed that with my color code technology chart. It tells you when to buy, when to sell, when to add, and when to run like hell. That's right. Make sure you check it out. It's free for 10 days. philsgang.com. Remember, when this market crashed in 2009, it should have never crashed because the chairperson of these two committees, their job was to protect consumers, protect our investments, and they're supposed to ensure that our investments are being monitored. Where were they in 2009 and 2008? They weren't anywhere because they don't do that. They take care of themselves. They protect themselves. They become richer. So you can't depend on these crooks in Congress. The stock market is a great place to be, but you just got to know this is a different market than your grandfather's market. So why don't you, for 30 days, join my gang, 877-600-GANG. Try it for 30 days, $39.95. Follow me. I tell you when to buy, when to sell, when to add, and when to run like hell. All I ask you, start making money. Please remember St. Jude.
Don't wait. Join Phil's Gang today and make profits. Go to philsgang.com or call 877-600-GANG. That's 877-600-4264. That's 877-600-4264. Short on time but want to invest in the stock market? Let philsgang.com help you. For only $39.95 a month, you get complete access to all of Phil's powerful investing programs, videos, and resources.
That works for me. Log in, watch the videos, and make profits.
Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264. philsgang.com. With the philsgang.com membership, we bring investors right to the floor, into the pits with Phil's daily live webinar classroom. Get inside market guidance on investing strategies. Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264. Don't have time to analyze and study stocks? At philsgang.com, we recognize that there are all types of investors, and we also recognize that your time is valuable. So we offer investing programs for all individuals. We offer investing programs for long-term and short-term positions. And philsgang.com provides quick and easy to understand investing videos that only take a few minutes to watch. With the philsgang.com investing programs, you will learn technical stock charting, how to execute your trades, and most importantly, you will gain the confidence to know when to get out of a stock and take profits. Sign up at philsgang.com. That's philsgang.com. Or give them a call, 877-600-GANG. Short on time but want to invest in the stock market? Let philsgang.com help you. For only $39.95 a month, you get complete access to all of Phil's powerful investing programs, videos, and resources.
That works for me. Log in, watch the videos, and make profits.
Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264. philsgang.com. Welcome back. Learn, invest, and make profits with Phil Grandy. Simply go to philsgang.com. Now, here's Phil.
And welcome back to Phil's Gang. All right, so let's talk about the big tech stocks everybody's buying today. Now, Facebook, now that could be a buy, but not quite yet, because on my chart, it's telling me they don't have enough buyers. See, that's the nice thing. When a stock's going up, like this stock, from $296 up to $318, people jump in because they listen to Varney buying the dip. But here's what they don't understand. How do they know it's sustainable? How do they know enough investors are buying it to keep it there? They don't. But my chart, which is the only charts in the country that do this because it's patent, it shows the last 2 days as it was going up, it turned red. It warns you, gives you a warning. Don't be buying it right now because you could wake up tomorrow morning and let's say you buy it today at $318. You could wake up tomorrow morning, it could be already down to $280. That's what happens. But you don't know that because you don't have the chart to tell you that. You just get in and buy. Now, the trend is right on the edge, almost ready to turn. So you wait until it turns green. So let's say tomorrow, 9:30, the stock goes up and it turns green. All right, so let's say it closes tonight at 318. Tomorrow morning, it goes up, starts at 3, goes up to 328, turns green. Now you look, and has the trend turned? And if the trend has turned, then you got a good buy. And it's almost there. Not yet, but this chart will guide you so you know exactly when to get in. Not this guesswork, buying a dip, buying a dip. So now if you go, and let's take a look at another one. Okay, another one, if you go down and take a look at, let's go to Netflix. All right, now Netflix dropped from $590 down to $480. Now, people are buying it. I can see it on my chart. It's going up. But it's red. It means it's not out of the downtrend yet. See, before you buy a stock, you got to identify is the overall trend of this whole group of stocks. If you're buying the NASDAQ stocks, okay, you got to know is the whole group, the basket, what is the trend? if the trend is going down, indicating down, and just because the stock's going up for a day or two, that means nothing. That's how you lose money. So it's the most important thing of buying a stock when you invest is which direction is the trend. And then when you know which direction the trend is, now you look at the color of the candlestick. And mine's the only one that does this. Nobody else does this. If it turns green, from red to green, you got yourself a good buy. But like today, it's red. For 2 days, it's been going up red. And by the way, Netflix, the trend is down. So what it's telling you, this whole group, the money is going in the wrong direction. The flow of money is going out. So you think by looking at it and you listen to Varney or anybody else, they'll say, buy Netflix today. It's a good deal, good deal. No, it isn't. Because even though the candlestick's going up on your chart, the flow of all the money as an aggregate, all the stocks in this group is going out, not in. You got some dopes buying it because they're listening to a dope like Varney's telling you to, well, at least you don't listen to him. So that's you could really be in serious trouble on Netflix if you buy that today. How about Apple? Look at this. Last 2 days, same thing. People are buying Apple. What's it tell you? Why would you be buying it? The flow, the majority of the money for Apple is going out, not in. So you're going to be fighting. If you buy that today, you're saying, you know what? I'm smarter than all the insiders. I'm smarter than the insiders at J.P. Morgan, the gangsters at Citibank, the gangsters at Bank of America, the gangsters that are at the insurance companies, the gangsters at the hedge funds. You know more than they do. That's what you're saying. If you buy Apple today, you're thinking you know more than they do. My chart tells me, see, I can tell what they're thinking. I can tell, I'm not the thing, I can tell what the trend is. So the flow of money is trending out. It's trending out, not in. So if you're buying Apple today, you could get hurt. You know, you should just look at the chart for 10 days. It's free, for heaven's sakes. You get a membership and the chart free. And then just follow our portfolio stocks each day. And every day, Steve, head of our education department, posts our portfolio stocks. He tells you exactly what to do.
Lowe's, just hold your position right now, which is short with a...
Then he goes out and explains what you should do. Who does that for you? Who does that for you? Nobody does that for you. So at least when you buy a stock, shouldn't you know the trend of the money? I don't care what stock you buy. If you buy, let's say you buy Cisco today. Now, Cisco is close to where the trend is neutral right now. And it's green, and it's at $52.93. The high was $54. So what you want to do, if it goes up tomorrow and breaks out of 54, and the trend indicates it's up, then you buy Cisco. You know exactly when to buy it. Don't listen to them when they tell you buy on a dip. That's a con job. Okay? They need you to stop the market from going down. That's why they tell you buy on a dip, buy on a dip, buy on a dip. Where? Point to me. Point exactly on a chart, Varney, where I should buy on a dip. Just, come on, point to a chart. Here, or here? Where should I buy? You just say buy on a dip. Where? God, it's aggravating. Now, if you take a look at the growth stocks, remember growth, big thing, right? Growth stocks, Tesla, Shop, Square, all of them were all just, they've gotten slaughtered. And here, look, take Square today. There's actually people in the last 2 days buying it. But look at the money. The trend is going out. Money's going out, not in. So you're buying, if you had my chart, you would never buy that today. You would never buy it because you always identify first the trend of money, in or out. It's going out. So why don't you wait until the trend money's going in? I'll give you an example. If you take... Go back to March 26th, if you're bought Square, March 26th. The trend was going up, right? But guess what? Even though the trend was going up, there wasn't enough money to buy it yet, meaning it remained red from $200, and it finally turned green. It finally turned green around $224. Now that makes sense. So you wait till it turns green, and then it's telling you there is enough money. There's enough money to sustain this price. It did. It went right from, so you know comfortably I'm going to buy it at $232, and it rallied all the way up to $280. And when you buy it, you can be really comfortable because you know it turned green. Remember, it stayed red. It stayed red from here. It stayed here. It is. Stayed red from $200, okay, up to around $238. It stayed red, $200 to $238. But you would have been in there. If you just looked at a regular chart, you'd have been in there. If somebody told you to buy a dip, you'd have bought it. But the problem is, when you do that, if you're buying from $200, okay, and you remember from $200 up to around I'll just use 230 for quick, 232. From 200 to 232, if you got it, yeah, it went up. But you could wake up the next morning and lose all your gains because you bought a stock that was out of trend. It was out of trend. And even if it was in trend, it tells you, but there's not enough money to hold that trend, to make that trend sustainable. So that's the thing. You look at the trend, but you got to identify, even if the trend's going up and you're buying stock, is that trend sustainable? My chart won't turn green until it is. It won't turn green. The candlesticks won't turn green until it is. Then when it turns green, you're assured you're okay. It's recorded that there's enough money going in that stock square. So all these stocks, they're all going up today. People are going to get caught. That's exactly what happened in the dot-com craze. Now, why? Why? Because they don't understand. They don't connect the fact that the government is not going to stop printing money. And when you print money, the government prints money, or the Federal Reserve prints money, they take the money and they're going to keep buying all the debt from the government. They've been doing this since 2008. You think they're going to stop? They can't stop. And they buy the debt because they're forced to keep interest rates down. Why? Because right now they're paying $352 billion in interest a year. The interest rate's at 2.2%. If that interest rate just goes up 1 more point, 2 more points, the market could collapse big time. So they're doing everything they can to make sure the rates stay down. The rates stay down. So that means techs are in big trouble.
You have been listening to Phil's Gang with your host, Phil Grandy, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.